For many family-owned businesses, passing the business on to the next generation is the natural progression. In this episode, Jeff Dvorak, a tax partner at Hawkins Ash CPAs, weighs the many financial factors that go into transitioning a family-owned business from one generation to the next, and provides his expert guidance. This is the Tax Insights podcast, where the professionals at Hawkins Ash CPAs break down complex tax topics into bite-sized how-tos. Let's listen in.
One of the transactions that we see a lot is a business owner that's looking to sell his business. And like you said, sometimes he has the option to sell to an employee or maybe a third party, but there are many times that they want to keep that business in-house and have the kids own it. Yeah. And that's a great way to transfer a business.
So, Jeff, in your opinion, would you recommend gifting? Would you recommend just straight out selling when we're talking about family-owned businesses?
Yeah, it really depends on the circumstances, but I'm more of a fan of a partial gift and a partial sale, because then the child has some skin in the game and the parents get some, extra retirement income out of the business.
Yeah. Is it legal, I guess I've always wondered this, for a business owner to 100% gift a company over to another family member? Or is there too many tax consequences for something like that?
Right. Yeah, you can do that. And a lot of businesses do just gift right from the parents to the children. But the one thing that you have to realize is that the kids step into the shoes of the parents.
Okay.
So if the parents have, outstanding liabilities, if the business has, some tax consequences because maybe a lot of the assets are fully depreciated and don't have much tax value left, the child steps right into those shoes that the parents have.
So even if there were some issues that the parents had to take care of, and now it is gifted to a child, that child has to basically take on everything that they were doing?
Right. They essentially inherit everything that their parents had in the business.
Is that different if they would buy it out?
It is to a certain extent. So
okay.
if the children were just to buy the assets of the business and nothing else, none of the old history of the business,
sure,
the parents would have to pick up some tax and pick up some gain, but it might be worth it just so that the child gets a fresh start.
Yeah. So let's talk about how to finance some of these options of buying out, because there are a lot of very successful, financially successful, small-owned family companies here in town, and financing it could be a challenge for a lot of people.
And that's really the case, right? So in many cases, we find that the parents do a lot of the financing for the transaction, whether the business itself kind of holds the note or if the parents hold the note themselves. But we've also seen it where the parents have really wanted to totally divest themselves of the business and they go out and get a bank loan for it. So either option works. It just kind of depends on the facts and circumstances of that business.
Sure. A lot of different options there for different scenarios. Last question, Jeff. Let's talk about how does step up in basis play into all of this?
Right. So if the parents were to gift their business to their children while they're still alive, then the child essentially steps right into the shoes of the parents. So if the parents would have had a gain upon sale, the kids now have that same gain upon sale. But if you wait and the parents hold the business until after they pass away and then give it to the children get that step up in basis, and a lot of those tax impacts go away. Now, it's a little more complicated than that, so you'll want to talk to an accountant, but it can be better tax-wise if the parents hold a business until after they pass.
Sure. Jeff, a lot of great information here each and every week on Tax Insight. How would listeners connect with you and the team over at Hawkins Ash to start having some of these conversations?
I would go to our website, which is hawkinsash.cpa, and go to our CPA HQ section. We also have a lot of great content online, whether it be YouTube or things like that.
There we go. Jeff, thank you for your time, and we'll talk to you again next week here on Tax Insight.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.